Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. Markets are in free fall. Yesterday, after hours, initially spiking higher when the only thing Trump had mentioned was the auto tariffs at 25%. About 20 minutes later, the hammer dropped. Tariffs across the board, 10% minimum on everyone. And then specific countries saw massive increases in tariffs. The stock market collapsed. Stocks collapsed across the board. We are looking at a down day of 4% or greater right now on the NASDAQ and 3% or greater on the S&P 500. So let's jump into the charts and take a look here. If we take a look at the charts, we can see right here, this is the SPY. So here's where yesterday after hours, the market's initially pushing up when the only thing Trump during his speech was mentioning was the auto tariffs. And again, you can see the pop initially. And then right here, about 10 to 20 minutes later, that's where the rest of the tariffs were unveiled. The market's collapsing in the after hours. This is the 10-minute chart, by the way. So again, each candle 10 minutes, selling consistently off into the 8 o'clock time frame. This morning at 4 in the morning, we saw a small uptick there and then further downside, and we're basically back to the lows, all right? So in any case, the key here is that markets are in free fall. The panic is very palpable out there. We're looking at a VIX that is spiking up 15+%, the VXX up over 15%. That's the tracking ETF. And we're looking at a lot of things. Even silver is getting crushed today. Why? Well, simply the thought process here is that these tariffs are going to slow the U.S. economy immensely. Therefore, the demand, industrial demand for these type of metals, silver, copper, etc., are going down. In fact, remember the short I said that I took on oil? I got out of it this morning on the SCO for a 10% gain. It's a 2x leveraged ETF with members of Smart Money Commodities. So we knocked it out of the park on oil as oil is collapsing back down here. That was a chart trade through and through. I talked about the bear flag. We'll go over that as well. All right, back to the charts here. Let's take a look. And if we jump into the charts again, let's flip over to the daily chart. So right now we are trading below this trend line right down here. This again is the daily SPY chart. If we take a look here, we can see this is that trend line right here that we were just looking at. So very clear we're below it. In fact, look at after hours, and this morning we went up and tested the underbelly and were rejected. Guess what? This is our next level to look for today at 540 on the SPY, that equivalent to about 5,400 on the S&P. That same line is this one right here, which goes back to the lows from September 6th, 2024. Notice again, the low, the bounce, the retest, and then the bull market resumed. That tells me there's going to be some additional support there, and that could be a level today to trade. Now, if we look at the NASDAQ, folks, the NASDAQ is under massive pressure. This is the daily chart of the QQQ. We had a bounce yesterday, but ultimately, look at this. If we go to the 10-minute chart, look at the drop on the Qs. Yesterday, we closed around 476 and change. We're at 454, folks. That's a 22-point drop on this, and we're talking about like 700-800 points on the NASDAQ that will be down. So again, we'll continue to monitor that and see how that goes here. But ultimately, folks, markets, again, technology stocks, retail stocks, there's really nothing being spared here. The only thing I was noticing is that a stock like Pfizer, which happens to be one of my favorites, is basically chopping sideways. There were no tariffs announced on pharmaceutical imports, but at the same time, Pfizer is also known as a high dividend paying conservative stock, right? It's a play there that money goes into when there's kind of nervousness. And if you look at this, it was actually trading at double bottom, and it is low on the charts. You can see right off of this, had a small bounce yesterday. I still think it'll be down today, but the question is it going to be down 10% like everything else? And when I say 10%, I'm dead serious, folks. Look at NVIDIA today. NVIDIA closed yesterday. Let's take a look. We closed yesterday at 110 and change. We're trading at below 104. So that's basically a 6 and change percent drop. A Broadcom down over 7%. That's another close to $1 trillion market cap. Now, if we look at NVIDIA, where's our game plan here? What is our trading level? My first trading level today is going to be at the break of 100 even number right here. Okay, so again, really 101. I might start inching in around 101, and then right here would be an add level at 99. Notice pivot low and pivot low. Now, these are just day tradable levels. The only swing trade level would be back here. And this is a level that I told you guys about that I was expecting NVIDIA to go to over the next couple months. Might even get there sooner, maybe within weeks here. But this would be an interesting level for a swing trade bounce where I hold this not just overnight, but maybe even for a few days or even a week or two. We'll have to see how things go. But day trading wise, 101 to 99 today. That is my focus in terms of a technical day trade bounce. Couple other stocks out there that I wanted to go over here. Let me get rid of those lines. Lululemon. Lululemon's getting crushed, guys. Look at Lulu. Holy cow, what a drop. So Lulu coming down today, folks. This is down from $282 to below $240. We're talking about a 15 to 20% decline on Lululemon. Look at Decker Outdoors. Decker, down same thing, down 17% here on the stock pre-market. Now, why the heck would Lululemon and Decker and a lot of these other retailers be down? Very simple. They make their stuff in Vietnam or one of these other countries. And Vietnam, I believe, got close to a 50% tariff. And so again, when you make your stuff in one of these countries and there's all of a sudden a 50% increase in price, essentially, they're essentially going to have to pass that on to the consumer, or it's going to hit their bottom line and their profits, right? It's one or the other, or you split it. But either way, it's still hitting the consumer halfway and hitting your bottom line halfway. Valuations must adjust. So again, there's really nothing that's being spared out there. Now, the tricky thing here, and this is just a side note, folks, but a lot of companies, they had their production in China back in 2019, 2020, et cetera. And because of tariffs on China, and such things like that, and kind of the not the greatest diplomatic relations with China, they said, you know what, we're going to diversify away from having all our production in China for these goods, these cheaper goods. We're going to move it over like Vietnam, Thailand, Cambodia, like these other places. And they did that. And they thought they were doing the right thing by diversifying and taking that business away from China, since the U.S. did not have a great relationship with China. Now they're getting screwed. They're honestly getting screwed here again. And the question is, if they move, let's say they make T-shirts. Let's say they make T-shirts in Thailand or wherever, Vietnam. If they move that production back to the U.S., what are they paying a U.S. worker to make a T-shirt? That's the question. Maybe at some point we change to robotics. That's probably in the future. It's not going to be right now. My point is that T-shirt price is going up. There's no doubt about it. The T-shirt price is going to go up. All these basic goods are going to go up. It's just the nature of it. And this is what I've been telling people about tariffs, is that while you could always choose not to buy a T-shirt, at some point you either have to buy the T-shirt or you buy an alternative. I'm not really sure what an alternative would be to a T-shirt, but my point is just go topless, I guess. What the heck? Let's just go topless. We'll save some money. All right. Back to the charts. Apple. Look at Apple today. Holy cow, getting crushed. Now, why is Apple getting crushed? Because Apple makes a lot of their components overseas. Big tariffs means the iPhone cost is going to go up. And again, is Apple going to bring all that back to the U.S.? Maybe. The problem again, and this is just a side note, we'll look at Apple, we'll look at in a second Apple numbers in the charts. But the problem is, and this is what a lot of these companies are facing, is that, okay, you bring back production and it takes, let's say it takes 4 years to build out a plant and to get it staffed and all the robotics and everything like that to build out that production in the U.S. Number one, it costs more because labor just costs more in the U.S., just the nature of the beast. But the other factor is, you know, these CEOs are saying, okay, well, you're telling me that there's tariffs on these countries right now, but what about when the next administration takes over? Does all of a sudden those tariffs go away? And if they do I want to move back right now or just suck it up for 4 years? And this is with the changing of economic policies from president to president. This makes it really hard for CEOs. Now, listen, they don't feel bad for them. They get paid hundreds of millions of dollars, right? So we shouldn't feel bad, but I'm just saying these are the questions that they have to figure out, or essentially the decisions they have to make. All right, back to Apple here, folks. If we take a look at Apple, what are we looking at this? Apple is down at 206 after closing yesterday around 224. Holy cow, what a drop. Now look at this. Here's the level. Huge level on Apple coming up at 199. I will be all over this in the day trading room and maybe even potentially more than that. But this is a big level to at least start a position on at a break of 200, essentially 199 or so on Apple. Major pivot high. Look at the low from August. This was your big collapse in August that affected technology. That is a major, major level there. All right. Amazon. Amazon, if we go to the pre-market, look at this. Look, it's already kissing my level here pre-market. There's getting a little bit of a bounce here, but look, if we go to the daily chart, how awesome is this trend line? The trend line of support is basically 181 and change. So 180, we'll call it 181.70 or 181.50. Either way, on a technical day trade basis, I like this. As a swing trade, I like it as well, but a quick swing trade because this is 1, 2, 3, 4. This is going to be the fifth hit. Now, it's oversold into that, so you probably get a couple-day bounce. But remember, the more hits of a trend line you get, the technical analysis tells us and the probabilities tell us there's more chance of a breakdown. All right, so again, short day, a quick day trade, swing trade, maybe a quick swing trade. But for me, I'd be very cautious on these. These are shorter-term trades, as I always do. Always remember that, guys. I am not a long-term investor. So when I'm giving levels out, it's not like, oh, that's a great long-term. No. Not at all. Short-term, maybe swing trade, but mostly day trading for the day. I try to give alpha that can be acted on today. That's the key right there. Alpha for today. Maybe it's a swing trade too. That's just extra bonus. Okay, let's go back to the chart of Tesla. Tesla, look at this, by the way. Yesterday when those auto tariffs were announced, Tesla ripped higher. It traded as high as 293. And then it collapsed all the way down to 260. This morning, it was trading up to 274. Now it's back to 265. If we go to the daily chart, I still have this level down here, which is going to be supported around 215. That's going to be a big test if it gets down there. It's not even close to that at this point. In terms of a day tradable level, oh my goodness. I mean, there's a gap fill at 225. I'm going to just stay back on this for now. I'm just going to be fair with you guys and say I don't really have a great trading level for this at this time. Not to say I won't have one at some point, but if it did eventually over the next few days come into this level, then yes, that would be a good level. RH, look at that drop. Now, RH is getting hammered partially because they had bad earnings, partially because they gave bad guidance, and partially because some of their products that they sell in their stores comes from overseas. So this was like talk about the worst, literally the worst day to announce your earnings was right into this. It's like a three punch, like boom, 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 like knockout blow there for RH. Now the question is there an opportunity? And of course, panic and fear yields opportunities. So if we look at this, it's trading at around the 169 level. We go to our daily chart. And look, the stock is down from $456 in January, trading at what did I just say? 190, 170, basically 169. All right, so if we go back to the daily chart, look at this. We got to go all the way back here, and we got to go all the way down. Here it is. All right, look, this is actually a really good level. I like this level, guys. 159, right? See these high pivots right there? And then what about this? And I don't know about, oh my goodness, 155. So 155 to 159, look at the convergence of those two trend lines. That's a good level, guys. So this is basically, we'll call it again, 159 to 155. Just again, things can pierce, panic, but this to me, again, is going to be on my radar for a day trade today. There's no doubt about it if it gets down to these levels. And honestly, that could be a good swing bounce too. I mean, talk about, you're basically going back to levels this last traded in April 2020, and then before that, the highs from 2018. It's a lot. By the way, a lot of stocks look like this. I mean, look at the Decker Daily. We just talked about Decker earlier. Look at this. Look at this drop on Decker. And by the way, today it's trading here. So it looks like to me, Decker could go to 95. 95, you'll get some support. Gap fill would be maybe a swing trade level at 81. But I mean, these type of drops are becoming commonplace in this market environment, and that is pretty darn nuts. All right, let's flip over to gold. Look at gold getting trounced here, guys. Now, a lot of people saying, wait a minute, why is gold getting trounced? Why the heck, a safe haven asset, why is gold going down? Remember when the COVID panic hit, guys? Well, maybe you don't, but when the COVID panic hit in March of 2020, even though the stock market was collapsing, gold was also collapsing. Remember what I've said in some of these game plans is that when there's panic in the stock market and you have an asset that is appreciated as much as gold, there's going to be some profit taking and movement back to cash. It's just the nature of the beast. The other thing that's amazing about this is I was saying to you guys, I said, guys, yeah, you're above this, but remember, most of the time you peak above and it's kind of almost like a bull trap where they trap the bulls thinking it's a breakout and it comes right back in. And that's happening to a T. I told you I was short on gold. We talked about oil, natural gas. Obviously, we'll get into those charts. But here we go to the downside. And that is an amazing drop on this chart here. Love seeing that, folks. Amazing, amazing stuff on gold. All right, where's the gold support? Well, you have the low from just basically a week ago, right here. That's your first support. Second support would be right here. So we'll only go over those for now because we'll have to see if they get there. But first support, second support. And by the way, GDX was into a lot of resistance. Look at how when gold was going up, GDX was not going up as well. It was stalling out. In fact, it putting a topping tail on GDX. I highlighted this if you follow our financial news and analysis, which is free on the homepage. But that was that. And then today, if you look at GDX, look at this drop on GDX, folks. And I am short with commodity members, Smart Money commodity members on GDX as well. But what a drop there. All right, silver. We'll get to Bitcoin. Don't worry, we'll get to Bitcoin. Look at that. Holy cow. So remember, I was telling you guys, we were stuck between resistance and support. And I kept on saying, guys, I wish I had a trade. I know how many of you guys love to trade silver, and I just didn't have a trade on silver. And this is why, because it wasn't giving us a bull signal. In fact, it wasn't. It was kind of stuck here. And then look at this flush. Now, the beautiful thing about this is there is support here for a quick bounce. I'll be watching this very closely, right? So right here will be a key level. And then if we go below that, then we start talking about down here around the 28 level. But what a drop in silver. Silver down 6% on the day. And if we look at copper, what the heck? Let's look at copper today. Copper's hitting my technical support. It's another short. Look at the topping tail. See the topping tail right there? That was perfectly, again, perfect signal of a top in copper. I love the blow off tops with a topping tail. Remember natural gas. And I keep on bringing this chart up because I like to show you guys how charts repeat. Here was your topping tail, and look at the price of nat gas after that. It came right back in. Nat gas today is one of the few assets that's getting a little bit of a pop today. We are seeing a little bit of a move up. Historically, I've noticed that sometimes when the stock markets are selling, for some reason, natural gas, oftentimes those days does a little bit better. I don't know if it's a safe haven, whatever it may be, but either way, take a look at oil. Woo-ho-ho-ho. All right. How many of you guys remember when I was saying, all right, guys, I shorted right up here on oil. We got our pop, our bear flag. Look at that. And by the way, I drew it in even. There's my arrows. Now I'm saying there usually there's a little bounce, and then I think we'll break down. But holy cow, what a drop on oil. 6% drop, folks. Incredible. Congratulations, by the way, to Smart Money commodity and miners members. And by the way, yesterday thank goodness I did this. We were up 10% on United Airlines after buying it. And I was like, you know what? Going into Trump, this tariffs thing, I don't want to mess around. Let's take the 10% off the table. Look at the day today. It's all the way back down to 66 after being basically closing yesterday at 71. Incredible. So again, just listen, what this tells us is that don't get greedy. Greed kills. I know how many of you guys watched the Wall Street movie, the old Wall Street, Michael Douglas, Charlie Sheen movie. You know, greed is good. Greed is emotion. Okay. Greed is an emotional thing, and it actually will make you lose more money. And I know that's weird to think about. But if you think logically, it's neither greed or fear, right? It's logic based on charts. That's what's going to give you the best long-term ability to make money. Listen, everyone can, play. If you play 1,000 meme stocks or 1,000 meme cryptos, you'll probably hit one that goes 100x or 1,000x, right? I mean, it's just, the law of numbers during bull markets. But the point is that most of them won't. And most of them will go down. And if you're greedy and looking for 1,000x, let's say, you're going to end up being disappointed 99% of the time. 99% of the time. All right. Let's go. Speaking of crypto, let's go to Bitcoin real quick here. Taking a look at Bitcoin. Bitcoin, that's your intraday chart. You can see again, look at this, guys. Remember this trend line? We pierced it yesterday. It looked like it was going to break. Then we had the Trump announcement. Crypto got smoked. And it's down again, but look at how it behaved right at that line. This is why you must wait for closes and confirmation. And what have I been saying? I've been saying in general, guys, it's very rare to have a support level like this and not get tested. And we haven't hit it yet. We came here, we went here, we haven't hit this yet. And I'm still in the camp that at some point we go back there and hit that level. Wow. All right, guys, listen. It is a day where I will be zoned in. In fact, I was up at 4 in the morning, already studying charts, looking for levels. This is the prep game. If the markets were slow, I probably would have slept till 5:30, 6 o'clock in the morning. When they're like this, 4 o'clock latest, I'm up and I'm starting to study my levels, because I know that studying the levels early means that I'll probably catch more trades. And that can literally be the difference between me making a few $1,000s today or $10,000 or $20,000 today, right? So it's the difference maker. This is what I'm impressing upon you guys. You can't be a half-assed investor or trader. You want to make the real money, you got to put the time and effort into it. Now, the Winning Trader series, we're going to have an investor empowerment day in about 2 months or so. I'm going to put that on sale, knock that price down at least 50%. We're going to rock it for you guys. But my point being, again, is you put the effort in, the results come from that. And you guys can see it. And I love that you guys learn from these videos, these game plans, these trading the closes. It's fantastic. All right, enough said, guys. You guys are rock stars. Thank you so much for tuning in. Thank you for supporting us here. Again, data is key. No hype, no BS. Let's just focus on the charts. Find the levels, trade the levels, play the probabilities. Have a good one. Take care.